Good afternoon. Let's do some business here. We are doing it live, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. The roller coaster ride on Wall Street continues. All three of the major averages did close higher today on the weekly jobless claims reading that came out today, giving investors hope that the job market will continue to hold up. The latest report soothing concerns over a possible recession, which rattled the market since last Friday when we got the monthly jobs report, which came in weaker than expected. It turns out today the Dow closed up nearly 700 points to settle at 39,446. It was the Dow's best day since July 16th. The S&P 500 moved up 120 points to settle at 5,319, and the S&P 500 saw its best one-day performance since November of 2022. The Nasdaq closed up nearly 500 points, settling at 16,660. Quite a ride this week. The Dow closed up nearly 700 today. It was down about 240 yesterday, up nearly 300 on Tuesday, and down 1,034 on Monday. We're following the bouncing ball here. The price of oil also been moving around, mostly higher lately, a three-day winning streak for the price of oil. We saw the price of crude oil in New York, for example, ending higher by nearly $1 today to $76.19 a barrel. And Brent crude in London, the global benchmark, settling higher as well by nearly $1 to $79.16 a barrel. Crude oil getting a lift today after the Energy Information Administration reported crude oil inventories fell by nearly 4 million barrels in the week that ended August 2nd. Of course, tensions riding high in the Middle East, with the U.S. now warning Iran that its newly elected government in Iran and economy could suffer a devastating blow if it were to mount a major attack against Israel, according to the Wall Street Journal. That warning reportedly communicated to Iran directly, as well as through intermediaries. Iran, meanwhile, appears to be readying their public for war as it weighs its options in response to Israel's suspected killing of a Hamas leader in Tehran last week. State TV in Iran in recent days airing interviews with Iranians calling for Iran to attack Israel. Crypto's rebounding today. Bitcoin up nearly 2,000 at the moment, back above 61,000, and Ethereum is back above 2,600. Mortgage rates falling to the lowest we've seen in more than a year. This as benchmark bond yields. The yield in the 10-year note, which impacts those mortgage rates, has fallen dramatically recently, and right now at 3.99%. The average 30-year fixed now is back down to 6.47%, according to the latest survey released today for mortgage giant Freddie Mac, and the 15-year fixed is back down to 5.63%. On the homeless crisis, I'll discuss what's happening these days with Jim Burning, Vice President of Legal Affairs and author of Nowhere to Live, The Hidden Story of America's Housing Crisis. The Pacific Legal Foundation has organized a book launch in Newport Beach next week in a discussion of the housing and homeless crisis, national housing shortage, possible solutions. Burning will be joining us live later this hour. Taxpayer advocates, meanwhile, taking a hard look now at the tax policies of the Democratic Harris-Walz ticket, with Tim Walz's history as Minnesota's governor getting a lot of scrutiny. I'll talk about that with Patrick Gleason, Vice President of State Affairs at Americans for Tax Reform. But first, on your money, the markets, the economy, the wild ride we've seen on Wall Street, and the whole works now. Joining us live, Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan Hoenig, thank you very much for coming to the line this afternoon.
Frank, great to be with you. You are number one in business, and there's so much to talk about, globally, geopolitically, and certainly a lot to do with the stock market as well. And really, I'm happy to see a balance and happy to see, ironically, some of the real fear come back into this market. And we've seen some top 10 spikes in the VIX, that volatility index. So, that sets us up for some potential rebound, some potential rally here, but I just don't think the rally is going to be in those old familiar names. You take a look at, for example, at a stock like SMCI, one of the major semiconductor go-go stocks of recent years. It's still down 50% from its high just a few months ago. So it's got to rally 100% to get back to even. So I do think there's places to make money here, but I just don't think it's going to be in those old familiar places moving on.
On your live with Jonathan Hoenig, and you certainly guided this audience very well just before this sell-off, and warned people to stay away from the Magnificent Seven. Do you still feel that way after this washout? NVIDIA, we see today, had a big rebound, up more than $6, back to 105 and change, well off its recent high, of course. What do you think of NVIDIA and the rest of the Mag 7 names here?
We love, almost instinctually, Frank, we like the idea of buying a value. There's something that makes a stock attractive for people when it goes from, 120 to 90 or 80. They think they're getting a bargain. But, oftentimes because trends tend to persist, that bargain isn't a bargain. That, 90 goes to 80, 70, even 60. So my thought is you always want to, as they say, go where the action is. And right now the market is favoring those so-called steady eddies, not the technology stocks which had led previously, but names like tobacco or Procter & Gamble, Coca-Cola, utilities are at 52-week highs, real estate are at 52-week highs, a lot of those dividend-oriented names. So if I'm putting new money to work now, that's where I'm focusing, not trying to pick bottoms, not catching falling knives, but as they say, going where the action is and some of these more off-the-radar screen and decidedly less sexy names.
Right. I remember Clorox moved up the day of that 1,000-point washout this week, right?
Yeah, Clorox was at Procter & Gamble again, doing quite well. I've been extremely surprised by some of the preferred stocks, even some of the exchanges like ICE, CBOE. I own both of those. I also think you can own gold here, Frank, not too far from its 52-week high. The irony of, talk of lower inflation, even as the price of gold creeps higher. So I do think there's going to be places to make money here. But, the names like NVIDIA, Microsoft, I can't help but think of Intel. In 1997, Worth magazine called Intel the one stock you needed to own to capitalize on the internet. Well, the internet did succeed. Intel did succeed. But today, now, 24 years later, the stock trades lower because when you buy a stock, you're buying a valuation. And the valuation of so many of those ultra high-tech stocks is still extraordinarily high and unsustainable over the long term, in my opinion.
Right. Intel has taken a big beating lately, up $1.50 today to $20.49 a share. Meta had a good day today, nearly 21 at 509. Any thoughts about the other names? Apple also, of course, and we saw that one. That's the one that Warren Buffett's Berkshire Hathaway unloaded in a big way. What are your thoughts on Apple here?
Great company. Can it be a leadership name again? And, here's a stock was $234 just back in the middle of July. It's about $213 today. And Frank, it sounds, kind of bewildering to people, but in my opinion, you'd rather buy it closer to that 52-week high. It's actually a better buy at, let's say, 220 than it is at 213, because at 220, the market's telling us that it's ready for that next big leg up to 240, 260, to 80. But my sense is that, and again, all of our crystal balls are always muddy, but my sense is that we might not see it with Apple. It's probably the cheapest of those big cap techs, but as I said, the market's favoring names like tobacco, British American Tobacco, BTI we talked about, all the names that really are anti-tech, if you will, real estate, IYR, I think you can own right here. So, you have to look at the big picture. One day is great, but a swallow does not make a spring. And I think buying the dips in tech could be akin to those who thought they were getting a great deal in Sun Microsystems back in May or June of 2000. A lot of those stocks went down and never recovered again.
All right, Hollywood's still recovering from the strikes last year. Today, Paramount Global, parent company of CBS and Paramount Studios, announcing big job cuts there, booking billions in operating losses in the second quarter. This is the one that supposedly is in a merger deal with Skydance Media, and looks like there's a deal on the table and possibly some others. What about the Hollywood-related stocks, Paramount Global in particular?
Well, what on my screen at least looks like I'm thinking of Warner Brothers. Many of these, Frank, at either 52-week high lows, all-time lows. Even Disney, which had been my favorite in this space, another one. Sinking to multi-month, multi-week lows, and just as saying that. We say that a stock is never too high to buy. It's really never too low to sell. So, the media landscape continues to be shaken to its core. They got through the strikes, but so many of these business models fundamentally are being shaken up. And, Disney this week is trying to push through more price hikes, hiking the cost of Disney plus a couple of bucks. People are sick of that. They are, I don't believe, willing to pay for more and more and more content as they have so far. So I think media, out of all the different areas right now, is probably one of the least attractive names. Great companies, but not great stocks given how weak they are and appear to be right now.
On there live with Jonathan Honig. And what about, I know you don't have the laser eyes on, but you do watch what's happening around you with the wide moves we've seen in crypto lately, with the Bitcoin seeing quite a downturn recently, a bit of a bounce back right now. Let's see, up around above 61,000 here at the moment. What are your thoughts about what's happening in the crypto world?
It's the trend at least is down, quietly down, and it doesn't mean it's a bad technology. It doesn't mean it's it simply means that that's not where the market is putting its focus right now. And what's ironic, Frank, is Bitcoin's been dropping at the same time that the dollar has been dropping. And in fact, those who are worried about a decrease in the value of the dollar, one security they can consider, and again, you always want to do your own due diligence, but UDN. That's Umbrella David Nancy, UDN. That's a stock that actually goes up when the value of the dollar goes down. It's come up in the last couple of days. So, Bitcoin has always been a bit of a mystery to me, I have to say. I never owned it for clients at capitals.pig.com and never really traded it that much. But it seems to be wilting a bit these days, just under the weight of technology writ large. Not to mention potentially interest rates that potentially could go even lower, or other opportunities in the market. Long story short, I think there are better places to put your money than Bitcoin right now.
All right, sounds like you like analog gold instead of digital gold, based on what you just said about good old gold here a few moments ago, which has, of course, been touching record highs recently. We saw that washout on the Monday. I haven't talked to you since that big sell-off on Monday, in which the Dow closed down more than 1,000 points. When we had that big hiccup in Japan that night, where the Nikkei was down about 12.5%. What do we need to know about that? And is that trade unwound now? And what's happening there?
Well, the thing about gold, Frank, is you really have to play for the long haul. The last time gold had a bull market, it went up almost every year between 2001 and 2010. And, it wasn't huge necessarily moves every year, but they were consistent compounded moves, up 8%, up 12%, up 10%. So, I think, as you said, all-time highs beget more all-time highs. And they used to say that an ounce of gold should cost about as much as a fine men's custom suit. Now, look, I buy off the rack Brooks Brothers, so that's not my forte. I know you wear very fancy suits, so that easily could be $3,000 or even $4,000. Again, I'm not a heretic, and I'm not a sensationalist, but my sense is before the gold bull market is done, we'll see at least $3,000 per ounce on the precious metal, and that's still quite a ways to go from here.
I'm sure you know a lot of places in New York City where you can get an even better deal. And I'll show you some places in downtown L.A. where you can get a pretty good deal on a suit these days, next time you're out this way. Any other specific places, Jonathan Honig, where you're putting money now and or taking it off the table?
Well, there's a great old adage, Frank, when in doubt, stay out. So, when elephants are dancing, when you see these massive moves in stocks, it's very easy to get trampled. So, tread lightly. There's still many more new lows than new highs. Today, there was 200 new lows, only about 42 new highs. So I'm looking at some off-the-radar screen ideas. One is LEMB, L-E-M-B. That's an ETF that actually tracks emerging market bonds. You're getting a healthy nearly 7% dividend there. And another one also with a healthy dividend is that REIT preferred ETF I talked about, PSSR. Again, it's always part of a truly diversified portfolio. And these are the kind of names I think that can zig when the rest of the market zags, as it will do. Just might not be today, might not be tomorrow, but my sense is that we haven't seen the lows yet.
All right. And any other thoughts what's happening? You mentioned some of the real estate names. We did see mercifully mortgage rates come down this week as those bond yields have come down. What are you seeing happening in the bond market, by the way? And while we're at it, what's happening with the mortgage rates and the impact on the real estate names?
Well, a lot of the major real estate stocks, and O is the one I follow pretty closely. Ticker symbol is simply just owe. They actually call themselves the monthly dividend company, and that's their forte, is that regular, steady dividend check. And you're seeing you're seeing MMA, that's Mid-America Apartment Communities, a lot of these big names that make up the IYR, that real estate index, up at 52-week highs. And certainly surprising to me, but that's often what markets do, Frank. They surprise us. Boy, I can't believe it. The market's acting this way. But as we often talked about, price is primary. So my sense is real estate's going to continue to be a great place to make money. I'm not sure in the real world, if you will, but I think REITs in the financial markets are strong and are likely to stay that way. So IYR, I think, is a good bet. And even international real estate, RWX, is one to consider as well.
All right, another wild week. Jonathan Honig, thank you very much. We'll be looking for you on the major networks this weekend. A great job last weekend with everything that's been happening with that jobs report, renewing concerns about recession. And now we got those jobless claims out today, a bit of a rebound for the financial markets, but this bouncing ball, let's see what happens tomorrow. Jonathan Honig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan Honig, thank you very much for taking the call this afternoon.
Oh, of course. I'll be listening, Frank. Thank you.
Thank you very much. And out to the freeways we go right now on 790 KABC. 790 KABC welcomes Howard Jones and ABC with Haircut 100 coming to the YouTube Theater August 20th. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins. Call now, 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Tickets furnished by Live Nation. Call right now, 1-888-790-5222. Mottek On Money continues here in 790 KABC. We have a winner on Wall Street today with the Dow rebounding up 683 points, settling at 39,446 in what's been a wild week, with the Dow down more than 1,000 points Monday, regaining nearly 300 Tuesday, down about 250 on Wednesday, and up today nearly 700 points. The S&P 500 had a nice rebound today, up 120 points at 5,319, its best day since 2022. The Nasdaq gained nearly 500 at 16,660. Quite a week. The yield on the 10-year note has moved to 3.99%, still below 4%, impacting the fixed-rate mortgage rates, which are at the lowest we've seen in quite some time. Bitcoin, meanwhile, also making wide moves, up nearly 2,000 now at 61,277. Ethereum up nearly 100 at 2,654. Doge at 10 cents. Taking a look at NVIDIA shares, rebounding today. It had started the day below $100. Closed up 606 to 104.97. Apple up more than 3 at 213 and change. Intel up $1.50 today, back to $20.49. Google up more than 3 at 162 and change. Price of gold right now up $1.30 at $2,464.60 an ounce, and silver down 4 cents at $27.57 a share. Hollywood still in a world of hurt. According to Business Insider, Warner Brothers Discovery just told investors its TV networks were worth $9 billion less than the company thought. And now it's Paramount's turn today, taking a $6 billion charge on its TV business. The big difference, as Business Insider notes, is that Paramount is already about to be acquired, so investors won't care about the disintegrating business. According to Business Insider, Warner Brothers Discovery told investors this week that its TV business was in free fall and that it would take a $9 billion write-down on those assets. Today, it was Paramount's turn with the entertainment conglomerate, which is about to be acquired by David Ellison and a consortium of investors, taking a $6 billion charge on its TV business. For context, public investors value all of Paramount's equity at $7 billion. Paramount's press release barely acknowledges the write-down. According to a Business Insider, on the company's earnings call, Paramount management said part of the write-down is a bookkeeping necessity to even out what the company had previously thought its TV business was worth and the value implied by Ellison's pending acquisition. But the broad strokes echo what Warner Brothers was suggesting earlier. The cable TV networks that once powered Paramount, MTV, Comedy Central, and so forth are in decline, even as they continue to throw off lots of cash. Paramount's TV networks, including CBS, which was not part of the markdown, by the way, saw their overall revenue decline 17% in the last quarter. We see Paramount stock today down 25 cents at $10.21. Warner Brothers Discovery shares down 6 cents at $7.02. And now the latest news on 790 KABC. Mottek On Money continues here in 790 KBC. Turning to housing now, mortgage rates at their lowest level in more than a year. Some rays of sunshine here for the real estate business, with the average 30-year fixed dropping to 6.47%, according to the latest survey from mortgage giant Freddie Mac. The 15-year fixed is back down to 5.63%. This as benchmark bond yields have eased over the past week. Meanwhile, home prices hit a record in June for the second consecutive month. Home sales slowed again, ending a disappointing spring selling season based on some of the latest readings we got here on real estate. Home affordability and availability, of course, continue to be big issues here in the Los Angeles area. And, of course, homelessness also at or near record highs. Let's discuss what's happening now with Jim Burling, Vice President of Legal Affairs and author of Nowhere to Live, The Hidden Story of America's Housing Crisis. The Pacific Legal Foundation has organized a book launch for his book in Newport Beach, set for next week, and a discussion on the housing crisis, national housing shortage, and possible solutions. Jim Burling, thank you very much for coming to the line this afternoon.
It's great to be with you.
Wonderful to have you with us here. I know you've done a very thoughtful book here on what's happening with the homeless crisis and the national housing shortage. How do you see things going on at the moment?
Well, I think that we have a time where we can sort of fix the problems that we have gotten ourselves into. Housing, as everybody knows, is getting more and more expensive. And the primary reason for that is that it is so difficult to build the new housing where people want to live in this country, whether it's exclusionary zoning that makes it almost impossible to build enough homes in the suburbs, whether it's abuse of eminent domain, whether it's environmental regulations that just simply make it so difficult, impossible to build without being struck by one lawsuit after another. All these things contribute to the shortage of housing that we have today. And the way to get out of it is to build more homes and to make our rules and regulations so that we can build those homes that people need.
All right, we've been hearing this for years, of course, in Southern California, and there's been very little movement in that direction, just as we've always heard, we need to build more refineries to get the price of oil down, but that's not happened and probably will never happen. So what are the prospects of increasing supply here in Southern California?
You know, I'd like to be optimistic because I think one thing that we have today that we've never had before is the extent of homeless camps all across California. I mean, when I first came to California over 40 years ago, I didn't see any of the problems at the scope and level that we see today. And I think that's true for many people. And I feel sorry for young people who are just growing up, and this has been the background of their entire lives, seeing these camps of homeless people out on the sidewalks and in front of businesses and by the rivers. And this is because we just haven't built enough homes. And it may have been hidden for people for a long time. They might not have realized how bad the problem was getting, but I think it's becoming more and more apparent. But as my book, Nowhere to Live, points out, this has really been over a century in the making, where it is becoming increasingly difficult to build homes because of the impacts, the negative impacts on the rights of property owners to develop property in the way that makes sense. And I'm hoping that people are going to wake up, and I hope that books like mine, Nowhere to Live, and others are now getting the message across that we need to do something different. The status quo is not working.
And we're speaking on a day when the homeless population, as we just heard recently, is estimated to be about 75,000, larger than the population of most cities in the United States at this point.
Yeah, and you could take all the homeless in America, and they would be the size of a medium-sized city like Oklahoma City or something of that scale. And so, again, this is not something that we've had for a long time. Are we going to be content to be a third world country? I would hope not, because this country is dynamic. It has the resources to get out of this problem, but we have to face what is causing the problem. And what's caused the problem is simply a strong desire on the part of many people, bureaucrats and others, to say, we're not going to build any more homes. We want those homes some other place. But that's not doing anything for us. It's not doing anything for our environment. It's not doing anything for our kids if we force home building to be elsewhere, or we raise the prices so much that so few people can have affordable housing anymore. So we have to do something different.
All right. And look around. What do you see happening here in California in particular, where we have the biggest number of homeless?
Well, I mean, I see that some people are beginning at least to recognize the problem, but not doing much about it. As we know, Governor Gavin Newsom last week said that he was going to order the cities to get rid of the homeless encampments. Well, that's not going to do much good in the end if we don't have a place for people to live. If you're just going to move people from one place to another, that's hardly a solution. So I do see movement in California and Sacramento to sort of free up zoning and to have more zoning, or to have more housing in transit corridors, to have duplexes and triplexes built where there may be single family homes. But we also need to have a lot more homes built out in areas that are where there are no homes now. Brand new subdivisions need to go up in many areas. Should be building in California, for example, around 200,000 housing units per year. On a good year, we're building less than half of that. So what happens? Every year, the shortage is worse. Supply cannot beat demand. And despite the best hopes of people in Sacramento, they and we cannot overturn the law of supply and demand. We have to have more supply.
What about rent control? What are your thoughts on rent control?
Rent control is a horrible way of putting a Band-Aid on a bleeding wound that's only going to infect it and make it worse. If you have rent control, and wherever you have rent control, it's a terrible disincentive for building new, affordable rental housing. Investors simply don't want to put a lot of money into building rental apartments and rental homes if there's going to be rent control that's going to restrict their ability to basically have a decent return on their investments. People invest in building housing because they expect to get something in return, i.e. a return on their investment. And wherever rent control has been tried, the amount of new housing goes down and the supply shortages get worse. I'll give you one example. St. Paul, Minnesota adopted rent control several years ago, a 3% cap per year, regardless of inflation. There were housing projects that were being built at that time, but the day after rent control was adopted, the workers were sent home, the equipment was taken away, and you had projects literally built, half built with sticks and bricks in the air, and they were abandoned because of rent control. And there are so many apartment buildings that would be built but for rent control. So rent control, it's a nice short-term fix, you think, but in the end, it makes the problem much worse.
Tell us about the book launch. Congratulations on your new book, by the way. And I see there is something scheduled for next week. You want to tell the folks about that?
Sure. In Newport Beach, we have a book launch at the Pacific Club. You could go onto the book's website, nowheretolive.org, or Pacific Legal Foundation, contact pacificlegal.org, and find out more about it. We'll have free copies of the book, and I'll sign it for anybody who comes to the book launch. But I'm really hoping that people will read it and say, we need to do something different from what we're doing now, and we need to change our policies in order to restore the rights of people to build the homes near where people want to live.
Well, thanks for advancing this important conversation, Jim. It was a pleasure meeting you, and congratulations on your new book, and maybe get to join you there next week. Thank you very much for taking the call here. That's Jim Burling, Vice President of Legal Affairs at the Pacific Legal Foundation, also author of the new book. It's called Nowhere to Live, and takes a hard look at what's happening with the national housing shortage, possible solutions, and the homeless crisis impacting us here in Southern California. The book is called Nowhere to Live, The Hidden Story of America's Housing Crisis. Jim Burling, thank you very much for joining us live this afternoon.
It's been my pleasure. Thank you.
Thank you very much. And out to the freeways we go now on 790 KBC. Mottek On Money continues here, 790 KBC, turning to taxes now. Taxpayer advocates taking a hard look at the tax policies of the Democratic ticket, Harris Walz. With Tim Walz's history as Minnesota's governor getting a lot of scrutiny, what was his record on the economy? What has he done in Congress on tax cuts when he was there? What's his view on Social Security? Some pretty good questions here. Let's bring those up with Patrick Gleason now, Vice President of State Affairs at Americans for Tax Reform. Patrick, thanks for coming to the line this afternoon.
Great to be with you.
All right, let's take it from the top. Give us your first impressions of the tax policies of what the Democratic ticket is talking about.
Yeah, well, I'll say with Tim Walz, with governor of Minnesota, Kamala Harris found a candidate whose record on tax policy, both what he's proposed, what he's supported, what he's voted for, and what he's signed into law, is very complementary to what she wants to do on tax policy, moving in a progressive direction. And when you look at that compared to who the other finalist was in the Veep stakes, Josh Shapiro, it shows that maybe she avoided some headaches by going with Walz instead of Shapiro. Shapiro seemed like he would have been the stronger pick from a political standpoint, being a popular governor from a battleground state. That said, he's been saying a lot of statements over the past year touting the benefits of corporate tax rate reduction in his state, because he's come out in favor of accelerated corporate rate reduction in Pennsylvania, which was enacted by its predecessor. Josh Shapiro wants to speed that up. Not only that, he recently told the Wall Street Journal that raising the federal corporate tax would be an anti-competitive move for the U.S. So given those remarks, those very recent remarks, that could have put the Harris campaign in a tough spot, considering that she wants to take the federal corporate tax rate from 21% where it is today up to 35%. So her campaign would have had to deal with these comments from Shapiro and why they contradicted where she wants to go. So she's avoided that by going with Walz. You look at Walz, I mentioned he's very complimentary. As governor last year in 2023 alone, raised billions of dollars in taxes. He raised corporate tax, which I mentioned Kamala Harris wants to do. He raised personal income tax. He raised taxes on investment income. But not only that, he also raised a slew of taxes that are aggressive and that will disproportionately hit low and middle income households. And that's the same for Harris, too. She has a number of taxes she's proposing that would hit low and middle income households. So when it comes down to the two finalists in the Veep stakes, with Shapiro, she could have had a running mate who has a contradictory background when it comes to tax policy. And with Walz, it's very complimentary. I'll mention Walz, last year, he signed billions of dollars in the taxes into law. He did that as part of a budget that had an $18 billion surplus. And now, to put that in the context for people from a large state like California or for folks who deal mostly with the federal government, Minnesota's budget, California's is about 8 times the size of Minnesota's. So that's the equivalent of spending a more than $150 billion surplus in California in 1 year. And that would be the equivalent of spending a $1.9 trillion federal surplus in 1 year. So he spent all of the surplus and raised taxes on top of it. And for that and a host of other reasons, his background is much more complementary to Harris's than the alternative, Shapiro's.
On the line with Patrick Gleason, Vice President of State Affairs at Americans for Tax Reform. Compare that, what you just described now with on the Democratic ticket and their policies to what the other side is proposing, former President Trump and his VP choice.
Yeah, well, it's completely different directions. So you have a very big contrast in the directions the two parties want to go to the top of the ticket on tax policy. So President Trump, he's talking about taking the corporate tax rate down further from 21 to 15%. Also, we have a giant tax cliff coming at the end of 2025. So for your listeners who don't know, in the 2017 Tax Cuts and Jobs Act, the Trump tax cuts for shorthand, those included a number of personal income tax rate cuts. Every income level received a net tax cut on average. All those expire at the end of next year. So if nothing is done, there's going to be an automatic massive income tax increase on the federal side at the end of next year. President Trump, Vice President nominee Vance, Senator Vance have made clear that if they're elected, they want to extend those personal income tax cuts and ideally make them permanent. So they'd like to do that. They'd also like to extend some other provisions. We have lost, we're in the process of losing, and they're being phased out some very important business expense deductions. President Trump and Senator Vance would like to restore full business expensing. So that's a little bit different directions. I'd also point out a big thing on the energy side, because it's not getting enough attention, but Kamala Harris has numerous times come on the record and said she supports a carbon tax. When she ran for president 4 years ago, she ran in favor of a carbon tax. And given that is one of the few far left policies that she ran on previously that she has not had staff come out and walk back with no explanation, since she hasn't done that for her carbon tax support, I have to think she very much stands by that, since she hasn't walked that back as she has with so many other things. So she stands by that. That is a very regressive tax that would drive up utility bills and further drive up gas prices. I mean, it's well documented how cap and trade has inflated gas prices in California. It's part of the reason why gas prices in California on average are so much higher than the national average and so much higher than in so many other states. As a part of the reason because of California's cap and trade program, Kamala Harris wants to take that national with a carbon tax, which would have the same effects. And speaking of cap and trade, when there was a vote on federal cap and trade under President Obama, which thankfully did not pass because at the time there was enough moderate Democrats, who weren't on board with that. At the time, Congressman Waltz voted for that. So Tim Waltz, when he was in Congress, voted for cap and trade. That was scored as $1 trillion tax increase over a decade of the most regressive kind, driving up energy bills, disproportionately hitting low and middle income households. So very big contrast between the two tickets, Trump Vance and Harris Waltz, in terms of their record, what they've done, and also in terms of the direction they want to go. Very different opposing directions in terms of what they want to do with tax rates and tax policy in general. Thanks
for advancing that very straightforward assessment of the two sides on tax policy. Certainly, we haven't seen a contrast like this, I think, since 1984, when Vice President Walter Mondale on the Democratic side was promising to raise taxes during his debate with President Reagan, who sought re-election in 84. And, of course, President Reagan famous for lowering taxes. And in that election year, the only state that Mondale won was his home state, which happens to have been Minnesota.
Yeah.
You probably were too young to remember that, but I certainly remember that, and that was a big deal then, all coming down to tax policy.
Well, you know what? I think if enough voters, the more they learn about the record of Harris and Waltz and what they're running on, I think it makes it all the more likely we get a 84 style landslide potentially. The more Americans live, but the question is, is the Harris campaign going to let her get out in public enough to be asked hard questions? Right now, she's not being asked anything. She hasn't answered any questions in an unscripted format. So I think there's a lot of questions to be asked. Why has she walked back from certain things? Why has she walked back from her previous position of wanting to end private health care and things like that? And then also ask her, does she still stand by previous positions, such as her support for a carbon tax and other proposals? So hopefully.
Excellent points, Patrick. Thank you very much for sharing your assessment with us here. That is Patrick Gleason, Vice President of State Affairs at Americans for Tax Reform, live with us here. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here with Mottek On Money on 790 KBC.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show.
Tucker Carlson, what is it that you think that people gravitate
I'm not
towards?
Self-aware. I refuse to be self-aware. I don't even look in mirrors at all, which you can probably tell from my appearance. I don't have a crazy high IQ, or I really don't have that many skills. I would say my main skill is I believe my instincts. I don't hesitate to follow my instincts, ever. To the extent that I have, I've gotten in trouble.
The Sean Ryan Show on YouTube or wherever you listen.